Today, we are tackling some burning questions that have been surrounding the real estate and the mortgage market. Questions like: is the real estate market about to crash? We've got a lot to cover, and as always, we're going to keep it straight, simple, without any hyperbole or unnecessary drama. So, I promise we'll make it worth your while today. Let's start with the ever imminent crash that many people have been hoping for. Every year, we hear the same predictions. The market is overheated. A crash is coming. But let's take a step back and look at the facts. The reality is that people have been saying this for years. Yet, here we are, still seeing demand, still seeing transactions, and still seeing long term growth. Now, I'm not saying that the prices won't correct themselves from time to time. In fact, they have, just like the stock market goes through ups and downs. But full blown crashes, those are rare or rather non existent. Remember 2008? That only happened because regulators, banks, and the lenders were all asleep at the wheel. That doesn't seem to be the case here in Canada. Let's, let's zoom in on Toronto, one of the most closely watched real estate markets in the country. If you look at the past 2 years, yes, prices have softened. But how have things panned out over a 3 year period, 5 year period, 10-year, or even 25-year period? So I looked at the data for the Toronto real estate market between 1978 to the year 2024. Over any 3 year period, the average return has been about 14%. It has gone up to as much as 74% and also as low as a 15% or a 16% decline over a 3 year period. Double digit declines were seen only between 1989 to 1993. How about considering a 5 year period? Well, the average return across such 5 year periods have been about 32%, has gone as high as 150%, and also has seen a decline of about 25% in some periods. The double-digit declines were also seen only between 1989 to 1995. How about 10-year periods between 1978 and 2024? Well, the average return has been about 82%, maximum being about 261%, and some periods have seen a decline of as low as 21%. Double-digit declines were seen between 1989 to 1999. So, what is the long-term story here? Well, the long-term story is average returns year on year have been about 6.3%, but obviously we have seen our ups and downs. So, the period between 1989 to 1999 has been sort of crucial. That was sort of the lost decade for Toronto estate market. But even with that, the long-term trend has been consistent growth. So here is a fun question for you. Which period saw the highest average price increase? I'm sure you're going to be surprised with the answer. Reach out if you want to know the data I used to derive these figures. Ultimately, the real estate market doesn't crash the way stocks do. Prices dropping 40 to 90%? That's unheard of. If you're sitting on the sidelines waiting for a once in a lifetime drop, you might be waiting forever. That being said, if you buy at the peak of a speculative market without consideration for long term trends, you are setting yourself up for trouble. So do your homework, work within your means, and be realistic. Now, you don't have to go out and buy a home just because I said so. Proceed when you are convinced you are ready to buy, and always with caution. Can real estate be a bad investment? Absolutely. For some people, it can be a bad investment. If you're over leveraged, you buy the wrong property in the wrong location, or pay way more than it is worth, or completely out of line with the long term price trend, or get into real estate with no actual plan, you could end up in trouble. Most people buy real estate using a mortgage. And so, if things do not go as per your plan, then the pain can be deep, severe, and pretty damaging. Only deep pockets can survive such a bad investment. But if you approach it sensibly and hold it for the long term, real estate has been a solid inflation hedge and wealth builder. The key is to be able to hold on, tightly hold on during market swings. If you're forced to sell at the wrong time, that's when you take a loss. I really do not get when people buy and sell homes like they're changing their sneaker or a pair of trousers. Well, if you still wear one. Rethink your approach if you have been guilty of such a behavior in the past. So, what is the key takeaway? Real estate can be a great investment when done right, but it is not a magic bullet. Smart investing means buying in the right locations at the right price and with the right financial buffer for those uncertain times. A big question that a lot of first time home buyers ask is, well, what home or mortgage can I afford? From a lending standpoint, banks look at credit history, your debt load, down payment, and even the type of home you want to buy when deciding on the mortgage eligibility. My advice? Well, at a basic, get pre approved by a mortgage professional before you start house hunting. Falling in love with a house first and then realizing you cannot afford it, well, that's heartbreak I wouldn't wish on anyone. Even then, I would not suggest going for the maximum mortgage that your bank or the broker will approve you for. Look at your monthly budget and your long term plan. Some things that you want to maybe ponder over are, do you really want to spend 40% of your household gross income on a home for the next number of years to come? Or how will you save or have anything left over for the other goals in life? If you have been approved for $1 million home, you do not have to go out and buy one. Can you pay off your mortgage early? For sure, you can. But you have to be intentional about it. Look into prepayment privileges, round up your monthly payments, or use lump sums like work bonuses or tax refunds. Advanced techniques like the loan conversion strategy can help you if structured properly. You do not have to carry a mortgage for 25 to 30 years of your life. There are better ways to approach it. Think of it like paying extra on your credit card bill. You can keep paying the monthly minimum amount and keep paying for long, or you can choose to get out of debt faster and save thousands of interest by making additional payments. Can the mortgage rate be negotiated at the time of renewal? Okay, so your mortgage is up for renewal and your bank has sent their renewal offer. Should you just jump in and say yes to their initial offer? No, that would be a big no. Shop around and check what banks and other lenders are willing to offer for a similar mortgage. Talk to other banks that you have a relationship with, or maybe use the services of a mortgage broker. Equip yourself with enough information so that you can negotiate with your current bank or lender. And if they're not willing, then move. But be realistic as well. You won't get a 2% rate and the banks are borrowing themselves at 3%. Nor can you move your mortgage if you're currently unemployed or if your credit has gone down. Knowing what is available in the market and what you can get realistically is key to a successful negotiation. Not everyone can behave like Trump and be expected to be rewarded. Okay, now let's talk about mortgages for self employed individuals and associated tax planning. All right, self employed people, listen up. If you are thinking about buying or refinancing, you need to plan ahead and way ahead of time. Unlike salaried employees, prime lenders and banks look at your personal income over multiple years. That means whatever income you report on your taxes directly affect how much you can borrow. So some of the key considerations that you should have. Firstly, lenders consider personal income, not just business revenue. But the business cannot also be a loss making venture. Secondly, your personal income can be a mix of salary and dividend. But be consistent about how you go about paying yourselves each year. Thirdly, the more deductions you take, the lower your reported income. Well, it's great for taxes, but bad for mortgage qualification. Speak with a mortgage professional about the income required for mortgage qualification before filing your tax returns. Some key dates to keep in mind. Well, 28th of February is near, and it is the last date for issuance of T4 and T5 slips. So make sure you make those income determinations now. Lastly, April 30th is the return deadline for most taxpayers. Self employed people get until 15th of June. Well, that's a wrap. If today's episode gave you some clarity, do me a favor, subscribe and share. And let's keep the conversation going. Whether you're a first time buyer or an investor or self employed, the key is planning ahead. Well, until next time, keep getting your shit together.